Good morning, everyone, and happy Monday to everybody. Thank you for joining our webinar this morning. I'm Tony Butler. I'm one of the life sales directors here at Insurance Agency and Marketing Services, and I have Kip Walker with Mutual Trust Life um, on the line as well. We're going to talk about some things going on with Mutual Trust Life and some sales ideas to help um, the advisors grow their business. So I want to thank you for joining. Jump right into our webinar. Now, if you're familiar with IAMS, what we like for our advisors to do is to have the opportunity to earn additional money outside of the money that you earn for the business that you're writing. So there's a few ways that you can do that here with us. One is our new producers builders. As you grow your production, you'll see there's 5 different levels here that you can qualify for additional perks depending on the business that you do submit. Definitely would like all of our advisors to take advantage of this. If you have any questions as far as the new producer builders, please give us a call. Any one of our sales directors would be more than happy to go over this in great detail with you. We also have our IAMS Business Builders program for our advisors, and this is more of a referral type of perk for you. So if you are an advisor with Insurance Agency Marketing Services and you refer another advisor to us, we do provide you with the $50 one-time credit. Um, I should say bonus as opposed to credit. So you do get a $50 bonus for that referral once they get appointed with any of the carriers that we work with. Any subsequent business that they do write, there is additional monies available for you as well. If you have any questions in regards to our business builders, again, please reach out to one of our sales directors and we'd be more than happy to go over this with you as well. We offer back office support for you. We always like to let our advisors know we want you to work smarter, not harder. So there's a lot of things that we do for you on the back end of stuff. We want to help from submission all the way to commission. So that entails case design assistance. We can help you with life and annuity quotes. There's paperless contracting available for you as well. We also have a 24/7 website, which has a lot of sales tools available for you. So we have a term and guaranteed universal life quoting tool. You can access forms online. You can get current annuity news available on our website. You can also do electronic applications, and there's 2 platforms in which you can do those e-apps. One is Firelight. The majority of the carriers that we work with on the Firelight platform are our annuity carriers, but there are some life carriers as well. As you see here, there's a list of all the annuity carriers that you can do electronic applications with, as well as the life carriers. Segueing into the life insurance arena, we also have IGO e-app solutions, which the majority of the applications for electronic apps, I should say, is available through the website. Now, if you are interested in Firelight and you haven't gotten registered for Firelight, you can do that through our website. If you need assistance with that, any one of our sales directors can help you with that. From a creative marketing standpoint, we do have solutions for you, whether it be turnkey, agency, or digital marketing solutions. As you see here, we have some additional tools available for you, whether it be professionally written handouts, flyers, newsletters, logo design, business cards, brochures. If you need assistance with your website or looking for help with digital marketing strategies, we can assist you with that. I would strongly recommend, if you haven't had a marketing analysis done, definitely reach out to us for that. It's a comprehensive analysis that we do with all of our advisors to look at where your business is right now, what you're looking to do, and what we can do to help you get there. Um, We also have the Retirement Analyzer available for our advisors. Now, the Retirement Analyzer is free for qualifying agents, meaning the production that you submit, it is available for you free of charge. Uh, some of the things that it does allow you to do for your clients is to answer questions like, can I continue my present standard of living into my retirement years? How would it affect my family if I enter a nursing home or if I were to die prematurely? If you want some additional information on this or would like to see a tutorial on that, feel free to give me a call. Can definitely get you some additional information on the Retirement Analyzer. We also have the IAMS Wealth Management team. The Wealth Management team is there for your high net worth clients. Charles Jr. and his team can help you increase your revenue, improve client retention, and strengthen client relationships with the various things that they do offer. Definitely give us a call. We can get you over to one of our wealth management uh, team members, and they'd be happy to see where they can fit you in or get you going from that standpoint. I'm sure everyone's familiar with the Life and Annuity Academy that we do. We try to do those at least once a quarter. It's a 2-day training. We pay for the travel and the lodging. The 2-day training includes sales ideas and strategies from top producers. We talk about the market space, whether it's in the life insurance or the annuity arena. A lot of times we will co-present with one of our top carriers to talk about the products that they provide. And again, the big thing is talking about sales ideas and strategies to help grow your business. I believe I do have a polling question for this. Let me double check here. Yes, I do. So if you'd like more information on the Life and Annuity Academy, I'm going to launch that polling question real quick. If you could respond to that, we can definitely get some information out to you. I think the next one that we're going to do is going to be in September. We just finished doing one with the theme here a couple of weeks ago. So I'll leave this up for a little while longer. All right, let me go ahead and close that out. And lastly, we have our 2022 Top Producer Summit, which is at Greenbrier. As you see here, there are different levels and qualifications for those levels. The qualification period is from December 1 of 2020 all the way up until June 30th. So that's this Thursday of 2022. Um, we do have different levels that are available for you and your guests to enjoy. If you have questions on Greenbrier, where you are in terms of qualifying for that trip, definitely give us a call. Be more than happy to discuss that with you. And with that, Kip, you there?
Yes, sir, I am here.
All right, I am going to turn this over to you.
Excellent.
I'm going to make you the presenter.
Oops.
So there you go.
All right, hold on just a sec. Let me get my screen pretty. Okay, there we go. There, can you see my screen?
Yes, I can.
All right, excellent. All right, well, thank you very much, Tony. I appreciate you having me on as always. And thank you everybody for tuning in and taking time out of your busy day. Happy Monday. And today we're going to talk a little bit about whole life, in particular single premium. There's kind of a dearth of single premiums out there these days when it comes to whole life. So we've had a lot of interest because we have a very good one, especially if you have a client that is interested in strong guaranteed cash values. A little bit about Mutual Trust. We have been around since 1904. We were established as Scandia Life, and then we changed the name a little bit later to have a broader appeal. And we have always been a participating whole life company. We are owned by our policyholders, not stock owners. However, in 2015, we did merge with another mutual company called Pan American Life. And they had a very strong international group and international life business, a strong domestic group business, but they were missing that domestic individual life channel or distribution. So we had been talking for many years, and the low interest rate environment had really been weighing on us, although we were still the very scrappy insurgent little whole life company that had a strong niche for itself. But as I said, the interest rates were just killing us. So we merged with Pan American. Now we are solidly a mid-sized carrier. We are rated AM Best. I'm sorry, we're rated A by AM Best and Fitch. We have over $6 billion in assets and over $1 billion in capital and surplus. And immediately after that merger, we took advantage of the synergies between the two companies and also the very strong investment performance that Pan American has experienced over multiple decades. They have been in the top 10% performance-wise on their new money rate. We took advantage of that. We relaunched our products with the same existing guarantees and just enhanced the dividend. And what do you know? We grew by about 15% compounded each year from the time of the merger through up until 2020 when the whole world fell apart. But now everything is back on track, and thankfully we are on to happier times. And so what I'd like to do is share one of our sales concepts with you to help you find organic growth in your business. Many or some of you may not even use whole life in your practice, and whole life is a good chunk of the market, roughly a third. So it's a great place to find some organic growth because there are clients out there who like the kind of guarantees that we talk about. We did finally launch an e-app, an electronic application, and Tony, you might need to update that slide, or hopefully you can update that slide because we are on Firelight. So hopefully you can add our name to that slide.
That's right. I totally forgot about that. We'll get that updated. Thank you for reminding me of that.
You bet. And so we want you to adopt our electronic application because obviously it helps to get business submitted in good order and get you paid quicker. And we know that time kills all deals. So obviously it's good for everybody. And along those lines, if you submit 3 applications by July 29th, and get them paid by September 16th, you'll earn $600. If you do that 2 times, 3 applications submitted and paid by September 16th, you get another $600. So just for writing business with us through our new electronic application process, you can get an extra $1,200. So here is our concept we're going to talk about, legacy access and control. And there are 3 solutions to this. We're going to talk about a couple of them. At the end of this, I'm going to jump into the Illustrator and show you a couple of case studies. So here is our concept. It's really simple. Our client profile are clients who are 50 and older. They value access to money over the return that they're going to get in the money. They want strong guarantees because what they really want to do is they want to leave this money to their children or their grandchildren. Now, this is life insurance, so we do want them to be in decent health, and decent health being somebody who isn't, on their deathbed. So we can get deeper into discussions on decent health if you want at the end. Here's their objective. As I mentioned before, they want to leave a benefit for their children or their grandchildren. It's not that a competitive rate of return isn't important. It's just not in the top 3. What they really want to know is that money is going to be there and they're going to be able to get to it. And they want to be able to get to it for one of the reasons many times is for that what if. What if I get sick? What if I need in-home care or nursing home care? So where are they keeping these funds right now? A lot of times they're in CDs, savings accounts, money markets, and annuities. Now the first couple bullets up there, those have the guarantees. Those accounts have the guarantees they're looking for. They're earning a little bit of interest. They have access to them. CDs have a surrender charge, but by and large, that's the kind of security they're looking for. With annuities are excellent accumulation vehicles and fantastic distribution vehicles. They can provide a stream of income that you can't outlive. They're great for that, but they're not the best transfer vehicles because tax deferred is not tax free. So ultimately taxes will be paid. How do you know that these funds are for inheritance or their family? Many times you can just ask them. If you're doing, hopefully you're doing a financial questionnaire, because that's how you're going to find these opportunities. If you're doing a financial questionnaire, you'll see funds sitting in an account, and it may be 50,000, 25,000, 100,000. And you can ask them, what is this money for? And many times they'll be happy to tell you, this is for my family. I want to leave it to them, but I want to be able to get to it, and just in case I need it. Another way you can tell is if you ever see an account held as POD or TOD, transfer on death or pay on death. And that is just telling you that they want that money to go to their family without going through probate. On annuities, you may see the purpose of the annuity as legacy. Well, as I mentioned already before, not the best transfer vehicles. As a matter of fact, only about 3% of annuities are ever annuitized. So that's a lot of opportunity out there to move those funds in whole or in part into something that is more in line with your client's objective. Our solution obviously is single premium whole life. It has the guaranteed death benefit, which provides an immediate increase in value for their family, income tax free. You have strong early guaranteed cash values that provide that peace of mind. They want to know that that money's going to be there and they can get to it. Mutual Trust, as I mentioned, we have the strongest early guaranteed cash values in the industry. The growth provides that liquidity and the access and control that they need. So they can withdraw those funds out anytime, no surrender charges, no limit. And we have that chronic illness rider for that what if. Now, our chronic illness rider is issued on all of our whole life policies rated table 4 or better. And it allows the client to accelerate the death benefit income tax free if they are unable to do, if they are certified by their doctor as being unable to do 2 of the activities of daily living or suffer severe cognitive impairment. They can accelerate the death benefit on up to $1 million. They can accelerate anywhere from 5% to 24% each year until the policy is depleted down to $10,000. At that point, it's converted to a paid up policy. Now, there is no fee for this rider, and in exchange, what they do is they do an actuarial adjustment down on the death benefit in the background. So what that means is you're not going to know exactly what you're going to be able to get on the maximum end of it. If you're taking the maximum 24% each year, you're probably going to get the full 24% the first year, probably the second year, but not the third year. So that's the trade-off. So it's not a replacement for long-term care, but it's definitely a good additional benefit for no additional charge unless they use it. We do have multiple product options to customize the coverage. You don't need to know that right now. You just need to get the information from your client. Use your financial questionnaire. If you need one, I'll have one sent over to Tony to share with you. But just to know that we do have multiple solutions, and I'm going to show you a couple here in a minute. So here's a case study. Female, 65 years old, non-tobacco, and she has $100,000 sitting in a CD or an annuity. We take those funds, which are sitting in a financial institution, right? The CD is in a bank's financial institution, same with the annuity. We're going to take that money, move it over to another financial institution, which happens to be Mutual Trust. Now, in return, the client receives an immediate increase in the benefit to $177,000, again, income tax free. Now, if she left the money in the account that she has now, whether it's the CD or the annuity, the client may think, well, if you leave it in there, eventually it's going to grow to $177,000, right? Well, yeah, eventually. But even if we assume a very generous 5% rate of return, it's going to take 20 plus years. Mr. and Mrs. Client, you're very healthy looking, but wouldn't you feel better knowing that you're going to get this immediate benefit no matter what happens going forward? Now, what do they give up in return for that peace of mind, that guarantee? Well, year 1 cash value is guaranteed to be $95,000. So they're giving up $5,000 the first year. Year 2, the guaranteed cash value is $98,000 plus. Year 3, it's $100,000. So now they're whole. By year 10, they have the equivalent of about a 1.8% simple interest rate of return. Not too shabby in return for getting the income tax-free death benefit plus that chronic illness benefit on top of that. So Our client's happy. She's able to leave more money to her children and grandchildren no matter what happens going forward. Has access to those funds, competitive rate of return, and the chronic illness benefit for that what if, or access to the cash value itself. All right, so we do have 3 solutions. Horizon Legacy is our true single premium product. And it has, as I said, if you have clients who they want a good death benefit, but they also want really strong guaranteed cash values, we're the one you want to look at for that. It also has our highest issue age, up to age 85. Now, there are other ways to build this. So we have Horizon Value. This is our flagship product. It's paid to age 90. It also has very strong guaranteed early cash values. And we can design this with paid up additions rider. And for those of you who are not familiar with whole life, a paid up additions rider can be thought of basically as a very liquid single premium whole life, and it's a participating rider. So you can actually build a policy where you're actually earning renewals on the base because the base is being paid from the cash value growth. It's not going to be huge renewals, but again, when's the last time you got paid on a single premium, paid renewals on a single premium product? We also have a non-MEC version. So that just means we are building something probably with a term rider to prevent MEC. And this would be for younger clients who have a longer time horizon, but we can build that with a 3 annual payments solution, 4, 5, 6, 7. They can decide how they want to do that. Lots of flexibility in how that's funded. But there will be more variation in the death benefit. But still, again, it would be non-MEC, so they'd be able to access those cash values income tax free. Now, before we dive over into the illustrator to show you a couple things, I want to mention we do have fantastic conferences. We're going to Ireland next year. And if you have not signed up with IAMS or through IAMS, with Mutual Trust through IAMS, I want to let you know that we double your credit the first 4 months. So that would go a long way in helping you earn a trip to Ireland. As a matter of fact, if you did all your qualifying business in the first 4 months, that means that you could go to Ireland for $40,000 of base premium or target premium. So very, very reasonable. So for those of you who are interested, this is a great way to get started in earning that credit. All right, so I'm going to pop over here to the illustrator, and I have already run a couple, and I'm going to jump over to the first one, which is our Horizon Legacy. Now this is the sample I just showed you. So here it is in action. So you see we have the increase in cash value here, the 95,000 plus. It's almost actually 96,000. Let me make that a little bigger. Almost 96,000. Here are the guaranteed cash values. Here's the guaranteed death benefit. And the dividend is not huge, but it does add value because every dividend that's paid after it is paid becomes guaranteed and now enhances this side of the ledger. So as long as you're selling to the guarantees, you're always going to be a hero. So that's how that looks, and that's our true single premium right there. And then I'm going to just go, and that's the one I already explained to you, but here's another one. This is a case I actually worked on. This is a businesswoman. She happened to have a 401k, and she didn't want that money. She wanted to pass it on to her children or her grandchildren, but she didn't want to drain the 401k all at once and impact her income tax rate. So what she wanted to do is feed that money in each year. And so we looked at a $20,000 annual premium to feed that money in. So that's what we have here. And you can see that the base makes up roughly $1,000 of that 20,000, and then the rest is going into that paid up additions rider. So yes, this is going to be a MEC, but again, her concern is passing on money to her children or grandchildren while maintaining access to those funds. And since she is over 59 and a half, it would just be taxed just as an annuity would be taxed. So we go to the ledger. And here we go. We can see that she's fed in $20,000 over 5 years. By the 6th year, she has all of her money plus back, and she's earning a rate of return. She has immediately 60,000 of that 20, with that $20,000 contribution, she has 60,000 additional or 40,000 additional income tax-free death benefit. And then it keeps going from there. As you can see, as she funds it, by the time she's done funding, we have almost $200,000 in income tax-free death benefit. Now, at the end of year 5, she has a decision she can make. She can stop funding at that $20,000 level completely, or she could continue to keep that base in force by paying that base premium of $1,095. It's up to her. If she keeps funding it, it's going to look like this. She's going to stay in the 2s, and that's income tax free. Now, this businesswoman had a lot of money, so her plan was to continue those premiums. But if you have somebody who doesn't want to do that, another option is that they could reduce pay up the policy. So you can reduce pay up this policy after the 5th year. She could do it anytime really, but if she decided no going back, I don't want to pay any more base premium, let's just stop that. And then your policy is converted to a reduced paid up policy. This is guaranteed. Now these are guaranteed numbers, well, except for the dividend, these numbers are guaranteed. So this policy would just continue to grow in cash value. The death benefit would actually just freeze and stay wherever it is at the 1st year. So around $180,000. That's where it would stay if we paid no dividends. All right, but we've paid dividends for over 100 years straight, actually 110 years straight. So, likelihood you're going to get a dividend. But in any event, worst case scenario, she's looking at $180,000 and her cash value just continues to grow. So we really give our clients, you have a lot of options in how we design this. And again, you don't have to know exactly how we're going to build it. But if you find out what your clients' needs are, what's important to them, we're going to give you our best look. And we're not going to try to fit a square peg in a round hole. We are an all of the above company when it comes to philosophy. IULs are great for those long-term cash accumulations. But when it comes to early cash value and accessibility, whole life is really strong for that. So hopefully, you've thought of somebody in your book of business, on your calendar, someone on your desk, and give them a call. Or if you want to learn more, you can call our sales development team, and they are very, very knowledgeable. All of them have a great deal of experience, and they all are very well versed in many different selling systems. We actually have coordinators for each selling system we partner with, which there are many. So just through doing that, they've become extremely knowledgeable. So here's their number if you want to talk to them. Of course, Tony, contact Tony if you have any questions or want to get contracted. He's the one to talk to for that. And Tony, I'm happy to take any questions.
All right. So let's see if we do have any questions. Don't have any just yet, so I'm going to switch this over to me.
Okay.
Switch this back to me. And while we're waiting to see if there's any questions, I do have a couple of polling questions that I'm going to put out there. Can you see my screen?
Yes, I can.
Okay, awesome. All right, so the next polling question that we have is if you'd like to get more information on what we've discussed today, I'm going to launch that question. Please respond and we'll definitely get some additional information out to you. I'll leave this up for a little bit. Okay, still have a few more responding. Okay, I will go ahead and close this one down. And the last polling question is, obviously, if there's a client that you have in mind that you see that this is definitely a good fit, we definitely want you appointed with Mutual Trust. So if you're interested on getting appointed with Mutual Trust, there's a polling question there. Make sure to get the contracting information over to you so you can get appointed. So I'll leave that up for a little bit. Looks like we have a few that are jumping in here to respond. So we'll leave that up for a little bit. All right, I'll go ahead and close that out. All right, so do I have a question? Well, I got to thank you, Kip.
Oh,
Looks like someone said that they're glad that IAMS brought Mutual Trust into the fold. Written quite a bit of business with you guys, so that's always good to hear. Thank you for that.
appreciate your partnership.
Okay. All right. So next question is, well, or would be the first question, I guess. The client still has to qualify for life insurance. Um, I'll answer that and then I'll let you kind of expound on that. Yes, there's going to be underwriting that's going to be required because we are talking about traditional life insurance. Now, from an underwriting perspective or aspect of it, Kip, you want to kind of shine the light on that?
Yeah, so we do have non-med underwriting up to age 50. A lot of these cases aren't going to fall into that bucket. But when it comes to underwriting, we are in line with, the middle of the road under life insurance carriers out there. So if it's a decline from, say, a Mass Mutual, it's probably going to be a decline from us as well. Having said that, though, we do look at financials very closely because of the type of business that we do. So there may be situations from a financial perspective where you can get approval from us and maybe not from somebody else. But having said that, again, yes, this is life insurance, and so we are looking for, individuals who have a heartbeat and can walk around.
Here's another one. This is actually a good question because this comes up quite a bit. I have an agent that wants to know if you have the time to explain in a little bit more detail on how to-pay non-MEC works.
Yeah, absolutely. Now, just to give you a heads up, since the changes that occurred from the 7702 changes, the new regulations, the 2 payments has become 3 payments. So it'd be just because of those changes. But yes, so the limited pay overall, I'd be happy to dive in into that and how we build that, and case studies and things like that.
Do you have time to kind of explain that now, or?
Oh, as far as how it works?
Yeah.
Yeah, sure, absolutely. So what all we do is it involves using a term rider. So each time you fund a paid up additions rider, it restarts the 7-pay test. And that's what we're doing when we build these cases. They rely heavily on a paid up additions rider because of the strong cash value in them. But by themselves, paid up additions riders are MEC policy or MEC parts of the policy. So he's a term rider to prevent that MEC. We add the death benefit of the term rider because it's cheap. And so what we do is we add the term rider, and then with that we can fund the policy into the PUA rider. As long as we keep that term rider on for 7 years or more, we'll pass the 7-pay test and we're good to go. It's kind of hard to explain, but I can show you on the illustrator if you want to do that, or we can do that at another time. But that's really all it is. It's just using the cheapest death benefit you have to pump up the face amount, so that the government says, okay, you're not violating the MEC test. And so that's how we do it. And then therefore you can have as few as 3. Now 4 or 5 is probably better, but you can have as few as 3 payments going into the policy, and then shut that all off and have no payments and still have a guaranteed death benefit and guaranteed cash value growth on a non-MEC basis.
Okay. Let's see what else we have. Oh, so thank you there. Okay. I hope that answered your question. Um, I don't see any additional questions. If anyone has any additional questions, we still have some time available to address those. Wait. Um, I will mention that after the call, if you do realize there was a question that you had or you needed additional detailed answer on some of the answers that we have for you, feel free to reach out to us here in the Life Department. You can do that either by calling our 800 number and asking for myself, Justin Ford, Beth Rickliffs, or Greg Calderon. We're all the life sales directors here in the Life Department and be more than happy to answer questions. Or you can shoot us an email. As you see here, there our email address, which is basically our first name at IAMSinc.com. And Kip, I think you let off the hook. Looks like we don't have any additional questions here.
All right. Well, thanks again for having me on, and thanks everybody for joining, and happy selling.
Yep. I would like to close off by saying that for this content and other content, you can definitely follow us or like us on Facebook or LinkedIn. As you see here, I want to thank you guys for taking the time out to join our webinar today. Again, if you have any questions, feel free to give us a call here at 800-255-5055. Hope everyone has a great week and happy and safe 4th of July weekend. And we look forward to talking to you guys again. Thanks again.
Thanks. Bye-bye.